But let's also bring on board then Kunj Bansal, who's joining in from the Sarthi Group to give us his views on the equity markets. And Kunj, at a time like this, when we are seeing, issues like the volatility spike, crude oil prices, are you advising one now to stay light and on positions?
Yeah, so it's after we have reached the market life high and barely corrected last 1 or 2 days from there, 1 or 2% from the indices. Obviously, when one is at a life high, the valuations also tend to be expensive. So it certainly does become difficult to take a very short-term call on the market. And in fact, if at all anyone has wants to take a short-term call, one should obviously be cautious, be slightly worried of the sharp movement that the market has seen in the last 1.5 to 2 months, almost close to 8-9% of the indices. But again, the whole thing, as you said, one of the factors that in the recent past seems to be dominating the market movement is the oil price hike. The other factor is that the result season has started, so that will go on. That is something that will keep having impact on the individual stocks. And of course, we are undergoing the general elections every 5 years, which happens, will also, depending on the news flow and finally the result on the 23rd May, could have some shorter term impact on the market. So yes, if at all anyone wants to take a short term call, one should be cautious, but those corrections are the ones which will give opportunity to take advantage of those dips in the market for taking benefit if one is looking at a, let's say, around 6 months plus kind of view on the market, which is where we will again see the commercials, the economies, the numbers, the macro and micro dominating the stock performance and the market performance.
Will you buy at a 10% correction, Kunj? I'm not looking at Nifty, individual stocks, because some stocks have already corrected.
Yeah, so I'm assuming the question is to me, and my answer is yes, of course. A 10% correction, let's keep in mind that first of all, 10% correction is a big correction. So if a 10% correction in the indices, I am specifically assuming that you are talking of large cap indices, which will mean around 12, 13, 14% correction in the mid and small cap indices, and 15 to 20% correction in the individual stocks. So yes, indeed, the answer to your question is that yes, because let's also keep in mind that it's again every time the fear and greed is something that tends to affect us, and that is what we have to try to overcome in the market. At a 10% correction, let's keep in mind that the market would have built in a lot of negatives. So it would have possibly built in the weak results, if at all that is what market is looking like. It would have possibly built in the further rise in the oil prices, which of course have a negative impact on our macroeconomy if that is likely to happen. It would have possibly built in some unexpected, unstable coalition kind of government, which will have impact on the commercial and economic policies of the market. So it would have built in some of these factors, and that is where the valuations would become attractive. Right now, as I said earlier, we are close to life high, and at life high, you don't expect the valuations to be of the comfort. So yes, that would indeed be the point of time. Of course, the news, let's keep in mind that the news flow at that point of time would be worse. It would be far more negative than what it is today. But then let's keep in mind that the good news and the good prices don't come together. The bad news flow at that point of time will offer us good prices to invest. So yes, that is what we will do.
Naresh, Kunj, pardon me, when it comes to earnings, you have a bulk of the IT companies that have come out with their numbers. Infosys, a bit mixed. TCS came out with their numbers, and that was a very decent set. And you had Wipro, which was a bit of a disappointment, the cut in margin guidance. How are you looking at prospects of the IT sector going forward, Kunj?
So in terms of, let me try and answer this question in from two, three points of view. One, let me first put it in terms of the investment point of view. As we have been repeatedly discussing, we are at a close to life high and valuations high. So if at all one has to invest in these kind of market, where does one invest? And I think that is where the IT sector comes in. Although historically its valuations haven't been anywhere comparable to the consumer goods or consumer durables or the banking and financial services, not that that's a sector to be compared it to, but let's keep in mind that in terms of overall financials, if we look at, the sector has been having a close to low double digit growth and a predictable growth. Let's also keep in mind that when we compare it to other sectors might be having the growth, but their predictability is far lesser, including for FMCG. Sometimes the rural growth or the degrowth tends to affect them, sometimes the urban growth or degrowth tends to affect them. Then it is the weather pattern, sometimes extended summer, sometimes extended winter, and all those things are something which have a far more impact, and as a result the predictability of earning for that sector becomes very low. Here you have a reasonably double-digit growth with a very decent predictability, with good margins, with cash flows, with regular dividends, and now regular buybacks getting offered. So I think in terms of risk adjusted investment, if one has to look, that's a very good sector to invest in. So my view there would be positive. My view would be of investing continuously, although the share prices have moved in the recent past. But given the way the companies have given highly differentiated results, it will have to be a very differentiated investment approach there. In terms of individual stocks, I think TCS, despite having risen so much, despite having reached towards the upper end of its valuation, is still a good investment. Infosys and Wipro are completely avoidable. What are those companies doing? It's difficult to understand, besides the management issues that Infosys continues to have, and the degrowth, not degrowth, but the compression in the margins that they have reported in this quarter. So overall, in terms of sector view, my view is positive.
Okay. That's the view coming in on the tech space, and fairly bullish there. Let me also get your view, Kunj, on the cement pack. We've got earnings kickstarting today. We've had a lot of bullish calls coming in on the sector as a whole. A lot of brokerages putting buy calls there. Let me get a sense from you on the kind of potential growth scenario you do see. What are some of the factors that you're tracking, whether it's on the demand side, on the volume side, what's really working in cement?
So if we look at the cement sector, obviously there are 2-3 things that one would look at. So in my view, what for me the topmost factor to look at, and what I do look at, is the volume growth happening, and with its ups and downs included. If we look at the last 3-4 years or so, wherein we have had mixed views, mixed opinions, mixed numbers, and mixed developments on the infrastructure sector growth, on the investments, on the private sector capex not having been there, which of course is being compensated by the government capex continuing. The volume growth has continued to be there in the sector. So anywhere in the range of on the lower side maybe 5-6% to on the upper side 7-8% volume growth has been there. So that's one very good thing, that, as I said, despite having been mixed observations on our economy, whether the growth was happening, not happening last 3-4 years, this is one sector which has been continuing to report growth. Now taking that factor further, obviously the next thing that has to come is the margins. Now if we leave aside last 1 quarter or 1.5 quarter, there were pressures on the margins because of the increased raw material cost. Now those have settled in, those seems to be having settled in, and that is where we saw some uptick in the margins of cement companies selectively in December quarter. We should see that trend continuing in the March quarter. So I think again, in terms of summarizing the view, but the view is overall positive. Of course, in this whole process, because of the market rise, because of the some bit of margin improvement in December and expected improvement in the March, we have already seen sharp upward movement in some of the cement stocks. Those have gained. In fact, to give you a name, Shree Cement is, if I remember, if I saw correctly, is probably trading at a 52-week high price, and as a result obviously at a reasonably high valuation. But I think I see the growth continuing there. Even if I take next 1 year view, of course, as we all know that election, the outcome of the result, what government formation, and subsequently what policies on the investment comes out is a big if. But keeping that aside, the view remains positive, because as I said, volume growth has been there, will continue to be there. Margins which were under pressure are improving, and despite commodity oriented companies, there is a reasonably decent control on the leverage. Broad as a sector overall, if we take, there are some companies which are of course quite net cash positive, some are borrowing, but a very limited borrowing with well controlled leverage.
Kunj Bansal, I can see you, but now I want to hear you. I could see that you were smiling when Ajay broke that story. Now let's get your reaction going. If indeed SoftBank decides to invest in Jio, what happens?
Yeah, so smiling is a part of the normal thing. Nothing has to do with the breaking of the story or the RGO or SoftBank investing in that. Coming to that story, I think it's obvious. I mean, you have already discussed all these points, so there's nothing new for me to add. It is obviously positive from 2-3 angles. One, that they are getting a backing of a strong financial investor, may not be a technological input that they'll be getting from them. Two, this will result into cash flow. It depends what is the structuring that they do. So in any case, the money will be coming in, which will either be used, if it's not through the sale of shares from the holding company, in which case the money won't come in the holding company and so can't be used to retire debt. But if it comes that way, then that will be helpful to to reduce debt. If it comes as a subsidiarization of Geo business and into that, then it will obviously be used for the further expansion of that, which is where I think given the way the industry is currently shaped up and the way the aggressiveness is likely to continue, they will continue to need money. So it's overall obviously positive. The details can only be worked out when one has more details, finer details, granular details on valuation, on the stake sale, on actual amount of money flowing in, and more details available from Reliance in terms of their need for the money over the next 1, 2, 3 years in terms of expanding the business. But net obviously it's a positive. Also, let's look at it from a different perspective. We obviously have been discussing, and we need to discuss the market and all that, and nobody knows what will happen to the market in the shorter term. But I am looking at it from the point of view of, let's say, 6 months from hence. So today we are in April, we'll be in October, November, assuming by then all the political related volatility has set in and market wants to, or market would continue to attract FII interest, if at all. Now, where will that FII money keep going in? I think the large part of FII money will keep looking for large cap liquid names, and which is where we know Reliance is the largest market cap, almost 8.5 lakh crore company. So that will keep attracting buying interest from FIIs, besides the domestic interest that has continued and the money that will keep coming in. So that is where also this stock will continue to have demand from the investors. So I think, keeping the shorter term volatility aside, it is indeed a positive development, and investment recommendation also is positive for the medium term.
All right, now